We are back. Another week here. Me and Andrew were just talking before this and saying that this market has been extremely insane the past 1 week, especially if you're positioned, in a few heavy hitters. It has been magical. So let's jump into the long-term view, the macro. There are some significant updates to talk about here. So let's start with that. So the first thing I want to cover is Bitcoin. And obviously, you guys see this all over the news now. I think some of you might be holding some Bitcoin, so I thought it might be smart to also go over the risk strategy for this asset class. Remember that mainly all of the gains you're seeing in the crypto portfolio and crypto space right now are all portfolio adjustments, which are taking advantage of a improving climate for the background, the government. Republican Party doesn't necessarily deny cryptocurrencies, and they're not like super enthusiastic about it, the real Republicans. But Trump, though, is very enthusiastic about cryptocurrencies. And so that's what the market's rallying off. Whether he's right or wrong doesn't matter. As long as he's making you money, nobody cares. Okay, that's my view. As long as something is making me money, that's all I care about. Deep down. I know it sounds terrible, but capitalistic nature, that's the way we think about it in the trading space. I don't give a shit about the emotions behind it, right? So we are running up past the 23.6 extension at 79,000 and now heading into the 83,000, where we might meet some kind of resistance in this zone. We don't know if it will be exactly here, but I'm down to bet that there will be some kind of consolidation in this area, and then maybe a pullback or consolidation, and then maybe a extension again into 88,000. But those are the numbers for Bitcoin that I'll be looking at for the upside. For the downside, it would have to come down all the way to 73 to capture liquidity in this area. So there's quite a fair amount of opportunity here, even in the future. As you can see, even for this upward trend line here, it's going to be needing to mean revert quite aggressively, right, to get back to the trend. Okay, so keep that in mind. If you have not invested in cryptos, please don't get in here. Use logic, right? We got in where the green arrows were. So this is the reason why we are still holding the position, and obviously likely to take some profits in this region, take some profits in this region later, and then continue to hold your long-term position. Okay, so that's crypto space. Now, this risk-taking thematic play will slow down in the future. So don't expect this prices to continue upward forever, is what I'm saying. Be smart about it. Take some profits off the table along the way as you go up, and don't overstretch your risk or take on new risk, fresh risk at all-time highs. Okay, this is a smart way to deal with this positioning. Okay, talking about SPX now. So 75% of earnings are over. All the big heavy hitters are over. Elections are over. FOMC rate decision is over. What is the market likely to do here? Digest and wait. And also likely to push up just a little bit more. So we had a big explosive pricing in here. And you can see how these candles are starting to become smaller. And so you can say safely that momentum is slowing down. Now, whether we get a pullback or not is a different thing altogether, because that will kind of dial down into the daily delta gamma exposure mechanics, which I'm not going to go into because Andrew will. So this is not something that I will dive into right now. Okay, Andrew will likely go into that. So to know the ins and outs of like the exact where all the buyers and sellers are sitting, Andrew will go over that in a little bit. Okay, so hang on for that. But what I do see is that at 6,040 will be the 61.8 golden pocket potential rejection. Okay, so whether we break out of this and make a new support on this area is quite slim, in my opinion. But whether this area becomes into a temporary resistance, much higher chance of that. So I will be looking cautiously to play any long positions this week in SPX. But then the story changes with the NASDAQ. Okay, so NASDAQ momentum has also slowed down, but here I feel there's still legs to the upside a little bit. And there's a chance that this gets actually forced to the upside just to close this this leg over here with the background that's going on. And tech is undersaturated right now. The only thing pushing this higher are key names like Tesla, your NVDA, the rest. If you look at the mega caps, right? Just to put this in perspective for you, okay? Look at Google, look at Apple, and look at Microsoft, okay? They are not at all-time highs. Amazon is, Meta, not really also, right? But Tesla is approaching all-time highs, right? NVIDIA is the only one hovering all-time highs along with Netflix. So out of the big, massive mega caps, not all of them are at all-time highs. So if they are likely to rally, that will cause the NASDAQ to further push up and, further grow into valuation here. Like, it's kind of like, imagine like you putting your foot into a shoe, like, that expanse of space is going to happen. Okay, now, small caps, once again, right? Beautiful performance the past week, insane gains, right? Where did we enter? Here and here, right? It's moved up significantly since then, which is nice. And here, there's nothing to do. No risk management, nothing here, because this move is likely to go higher, but we don't want to play the short-term pops here. Okay, so there's nothing to update you on small caps because I simply will not open a new position here, and neither will I do anything to manage risk here because I'm a long-term holder, and that's as simple as that. If you're looking at short-term pops, it's going to be quite difficult to specify exactly where you want, but I'm pretty sure Andrew will be able to give you more information. Okay, next up, bonds. So we know the background of what is happening with bonds, and I want to remind all of you that because I've received quite a significant amount of messages in the past 1 week with people messaging me, asking me, hey, T, is this the right time to buy bonds? Hey, T, when should I add bonds to my portfolio? And my reply to this is very simple. Understand what your outcome and investment strategy behind the bonds first is. Are you investing for capital gains, which will be weird, or are you investing for the dividend payout, which is what people invest in bonds for? That yield, right? So when we talk about the 10-year yield, that yield is what we are investing for, okay? So we want that yield to be high. And where Trump's election takes into account, the market has been selling off. Why? Because the market's pricing in the idea that Trump's economic principles will lead us into a bigger deficit, and then will also create a trade deficit. Now, whether or not you agree with this is irrelevant. That's what the market is pricing in. Okay, that's what the market's pricing in. Remember, keep your emotions out of it. So the market's pricing in a slowdown. That means higher inflation, right? Inflation, bigger deficit, etc. And what happens in return? Bondholders demand higher premium. So you can see the 10-year yield, what has been going on with it, right? Now, between here and here was where we had the fear of Trump inflation. I've marked it in the chart now so that we can refer to it in the future. But it seems like the 10-year yield has kind of buoyed and it's holding here, which is a good sign. Okay. Eventually, bonds in this area are a good first entry, second entry, third entry. But to me, because I've been adding it specifically over the periods of time, in this area, and so on and so forth, this will be my final entry for bonds. Okay, so I will be adding a final position for bonds here, and I will be doing it through the BND ETF. That's it. Okay, dollar index. You can see that we're still kind of struggling and fitting around here. My view is likely to go up into the 105.50, 106 range in the short term, and then finally, come back down after that. Let's see, right? Dollar, a bit difficult to predict this one. VIX came back down. 14, 15, this is within your nominal range again. As I had predicted right before the election, I told you guys the only biggest thing that will happen will be volatility will increase and then crash. And that's exactly what's kind of happening here. And then there is ARKK, which I want to talk about. So this one is, if you don't own it long-term, okay, and I know, expense ratio is a little higher, okay, but this is a good one to gain exposure into a multitude of different themes. Monetary policy being loosened, Tesla exposure, high beta names with high growth that are only going to benefit from a looser, financial environment. So If you are looking for all of those things, that kind of exposure, but you want it all wrapped in one basket and you don't mind paying 0.75% expense ratio per year, then invest in ARK. Okay, because this will give you that immediate exposure. It has been performing pretty well, and remember that in the past, this is where ARK has been, $160, and Tesla is just starting to take off now, right? So remember what happens when all that mentality comes back in and FOMO comes back in. You guys remember 2020, 2021 circa, when things were fucking crazy. Okay. So just remember that those kinds of things tend to repeat themselves. So asset classes that are undervalued or breaking out and things like that, keep an eye on them because there's money to be made. Okay. Chinese update, I'll do separately. So now it's quite complicated and quite big. I don't want to take up too much time. And then specific ticker breakdowns we'll go over later, but that's your macro update. So just to summarize, don't add Bitcoin, don't take new positions Bitcoin, manage your risk around this. SPX, approaching a potential resistance, wait for the interaction at resistance, and then we will know better. Also, CC Andrew, because Andrew's going to dive deeper into that. NASDAQ, to me, has higher legs, but be cautious because if SPX rejects, then NASDAQ might reject. So short term might come down and then go back up again. So that's for NASDAQ. IWM, no updates. Bond, this is my last entry into bonds at this levels. I will be posting it when I take the position. And that's it. Over to you, Andrew.
All right, sounds good. Let's get into the nitty gritty stuff. So there we go. Just gonna move that real quick. You can hear my dogs in the back yelling at each other.
No, we can't hear it.
Oh, you can't? Okay. All right. So let's recap real quick because something changed quite a bit last week. So if we go back to last week's playbook and we go to dealer positioning, we knew one thing to be very important, and it was that dealers were long 570. So when price came down into 570, we bounced right off of it, and there was no incentive for dealers to push price down because the customers were the ones who were short. Well, you guys can all kind of guess what happened with the election. Everybody, go here, everybody went long, right? And so what did that create? That created a situation where all the dealers had to go short. So when you look at dealer positioning, it's very different now. You can see that dealers are massively short a lot of these key levels. And this is important because, one of two things, right? Either the market makers are going to push price down to kill all of these contracts, or they're going to get squeezed. And the market is going to continue to melt up because market makers have to continue to buy shares. So let's take a look at the gamma levels. Then we'll look at the environment. And then we'll focus in on the key levels that you want to pay attention to. And that will help you kind of have an idea of what the price action could do come this week and where you want to position yourself if you decide to take risk or not. So the first thing we want to look at is going to be the gamma levels. And so the first thing that caught my eye when I looked at this was that 600 is clearly the biggest level, right? So pretty easy evaluation there, right? Over 600, we're in a pretty good spot to see more upside. Under 600, I would be very cautious if I was trying to go long and price is sitting under 600. So we know that 600 is a key level. We also know that if we start to dig into this a little bit and we go out to let's say December 20th, there's already positions building at 610 and 615. So does that mean we're going to go to that this week? No, it doesn't mean that. We would like to see a wave down and retrace the move, grab some liquidity, and then make a move higher into the back end of the year. But we can see these positions starting to build themselves, right? So we want to be aware of that. So 600 is going to be your key level to pay attention to. You can also see on the right, based on environment, if we break over 600, we go further into a positive gamma environment, right? And that plays into delta exposure for the market makers and what their actions need to be, which I'll show you. So 600 is going to be a key level. We can look at a few other ones, right? This is the week. You can see 600 again. This is next week. You can see 595, which I'll show you where that exposure comes from. And then 2 weeks out or 3 weeks out, there's 600 again. So again, right? 600 is still the main level. You go 3 weeks out of expirations and you're still hovering around 600. It's not till you get into like December where you start to see those further out strikes. So just keep that in mind. So now we can look at market maker positioning. So if we look at market maker positioning, we can see for 11/15, which is this week's expiration, you have two key levels, 580 and 585. So market makers, ideally in a perfect world, want the price to close below 580 and 585. So all of these contracts expire worthless. Does that mean we're going to go down there? No, but it does mean that right now dealers have to hedge these positions because they are short them. And these contracts are in the money because the other side of this is customers are long, right? So right now the market makers have to hedge these. So that's this week. If we look at next week's contracts, we see 595 and we see again market makers are short. So 595 is a pretty important level that you're going to want to pay attention to. If price breaks below 595, then there's no actions for the market maker. They can just sit on these shares or on these positions and let these contracts expire worthless into next week, right? So by next week, they want the price below 595. And then if you go into 3 weeks out, you get to the 600 level, right? Knock it off, you two. Then you get to the 600 level. So if you get over that 600 gamma level, market makers now have to buy shares to hedge this position, which creates buying pressure, which creates a squeeze on the market makers or the dealers, right? So those are key levels that you want to pay attention to. And if you look at the chart, right, and you go here, where's my SPY chart? It's not my SPY chart. Where's my SPY chart? There's my SPY chart. So if you look at the levels here, you can see that 600 is right here. And if you break 600, that's going to create buying pressure. That would push you up into your implied move, which is 603.85. If you break this, you can see 610 is up here. That's that gamma resistance for December 20th contracts, right? That would create a squeeze situation where the market would again get aggressive and the dealers would have to continue to buy shares, which would again create that FOMO of the market melting higher. Now, if we don't break 600, this buying pressure never comes in, okay? So that never happens. If we break to the downside, you have the buying pressure right here at 595. If you break this level, then this buying pressure goes away. You're most likely coming down into this order block down here at 590, right? You come down into here and into the short-term golden pocket situation. So if you reject 600, you break 595, there's a good chance you're coming down into this area right here. If you break that, then you come back down into this 585 situation where they want the price to close below 585 because then they kill all of those contracts. So all of those contracts that they sold that expire this week, if they get the price to come down and close below 585, they kill all those contracts that go to zero. That's the best case situation that they want. But if the price somehow gets over 600, based on news, based on some whale coming in and pushing the price over it, this could create a short squeeze on the market, squeezing dealers as we melt into the upside, up towards this 605 to 610 area. So those are the key things that you need to pay attention to this week. Everybody wants a pullback. I want a pullback as well because it gives better opportunities to buy. But if price gets over 600 and all of a sudden the market starts melting up on you and you're like, what the heck's going on? Why isn't the market coming down? It's overextended. It needs to come down. Well, the dealers are getting squeezed and they're going to continue to buy shares to push it to the upside. We know this because if we look at dealer positioning, we can see right here that their deltas are negative. They're in a positive gamma environment. And when those two things happen, when they are in a positive gamma environment and price decreases, they buy the dip.
Hmm.
So just because you want the market to pull back doesn't mean you're necessarily going to get the market to pull back. So keep that in mind. Under 600, possibly could get a short position. Price breaks over 600. I would be very cautious trying to short it. If we do start to see it break down below 595 and kill all that buying pressure, then I think we might get a decent pullback in the market this week and give us some opportunities to buy for a push later on into the back end of the year for the Santa rally. So that's what I'm looking for. And if we look at options flow, we're seeing the same thing. Like, let me log into this real quick. Thought it was logged in, but I'm not. Right? So if we look at options flow, we don't see them buying puts. The market, even on Friday, they're holding all their calls as the market sells off, which is usually something you want to pay attention to. And if you look at this over the last 5 days, which is last week, there's no puts. So the market is extremely bullish right now. And until we get some type of sign, you want to be very careful to try to get too heavy on the short side. Because remember, social media and all these people, they're going to sell you the crash. All the market's overextended. It's all just euphoria because of the elections. It can't hold up. These companies aren't valued at these. You've got to be stupid to be trying to go long here. All that different nonsense, right? And the reality is, if the dealer has to start buying shares and hedge that position, there's a good chance we go higher. So keep that in mind when you guys are looking at where do you want to apply risk? Why are you applying a risk? What can the market do? That 600 level is going to be really important. So that is what I have for you guys. Now we will open it up to you guys to answer your questions. We do have one more big earning ahead of us. We have NVIDIA, not this week, but next week.
Yeah,
So
that's
keep
right.
that one in mind as well, guys.
There are some really decent setups right now, though.
Oh, yeah.
Do you want me to do a quick run through of the setups that I have, or do you
Yeah,
want
you
me
can
to?
run through setups.
Should I? Okay.
Yeah, yeah.
Okay, let me do that.
Yeah. Just stop sharing.
Okay. Okay, so my first setup that I'm going to be watching for in this week is going to be AMD. Shows signs of a potential bounce, but I think that might be a little more downside before we get that bounce. So I'm going to be a bit cautious playing upside here just yet until I see a real firm rejection, rotate down. I wanted to really come in here and grab some liquidity, but I don't know if that will happen. So I'm going to be watching this setup for this week and next. Just putting it in front of y'all so that you can start to, kind of look at this a little bit. And, obviously just pay attention to it. Wait, hold on. Let me see. Where is this? Okay. Okay, cool. Okay, now next one, Moderna. So healthcare is actually the only sector on this entire list of sectors that is a very nice setup for bearish rotation. So if you look at the XLV ETF on the daily, you'll see a big mean reversion to trend and then a breakdown and then a retest and now showing signs of a rejection, which would mean further downside on this sector. Moderna is one of them that will potentially lose it even further. I tried taking a long on this position last week, just FYI, and I got burnt. So I got stopped out minus 30%, and that's okay. That's fine. So trade that went wrong. But now that it's moving further down from here, if it gets below $46, I'll be watching to short this even further down. It may come down into the 28, 29, 30 level. So potentially another short here with a sector that is in the background is attempting to go short. You see, that's the main thing that I'm looking at. NVIDIA. Remember, it was only about 3 weeks now that during the similar webinar that we held on a Monday, I told you guys about the unusual options activity that came into NVIDIA a couple weeks back. Almost 4 or 5 weeks back, they were buying options with these strikes between 160, 150, 170, 180. All of these strikes were being bought. And there was almost $200 million behind it, which now you can see the stock is moving and creeping up into those levels. So targets here, 150, 250, 160, and then 170 after that. I would probably let go some of my positions rising into these at small increments. Then there is Disney. Holding pattern, which is always nice to see after a reversal from a downtrend. We had to wait really long for this one, but it's finally paying out. The position is now finally in profits and up about 10 to 15%. And it looks like if we can continue to find this base here, then the next target that we're going to go hunting for is up in this region at the 23.6 extension, approximately at the $100 level. So you're looking at approximately $2-3 more, and then a potential rejection further down. So let's see what happens with this one. Okay, Amazon, update on this position because we've been running it. So we got the breakout, beautiful move, extended all the way to 11, came back down. My view is right now, the way this chart is constructed, we are in for a bullish consolidation, bull flag pattern. So you'll see something like this, and then like this, and then like this, and then like this, and then like this, like that, and then probably a breakout again. Something like that. Okay. So I'll be watching for that to happen. If we reject firmly and start breaking below 205, then this is going to set up for a bigger downward rotation to grab more liquidity at 195 or this 200 level. So between 195 and 200, it will collect liquidity again. That's the way I look at it. Okay, and Tesla. Okay, so this one is absolutely batshit crazy, which is great for us ever since we have been calling the long on this position for multiple times. The intrinsic value per share is $223, so don't ask me if you should be buying it. Obviously, if you are looking long term, you are far priced out at this point. We were talking about Tesla months ago, like maybe even a year ago, a year and a half ago. That was the time to buy. Now is not the time to buy. Now is the time to wait. If you are holding shares, wait. If you are thinking of entering long-term position, wait. Okay, so don't do anything with this. It's breaking out. See where the price settled. It's likely to break out into the 345, and then experience a rejection somewhere around here in the 61.8 extension, because it broke really firmly out of the 23 and 38. This is actually one of the biggest breakouts I've seen in a long time. This is a lot of momentum, a lot of breaking of key levels. So this candlestick here took out a lot of positioning. So we want to wait for sellers to step back into the market to see where the chips fall before we make another decision for the upside. And it's very simple. You don't need to overcomplicate this. Just don't touch it right now. Okay. Okay. That's all I have in terms of the updates on opportunities from my end. Now I'm happy to, maybe we can answer some of the questions that are here.
Awesome. So real quick, I'm going to add to your AMD.
Mm.
So AMD, so I took an AMD position last week. So AMD has pretty good support down here around 140. So, and if you look at AMD, it bounced right off of that support. So if it breaks 140, I agree that you're probably going to see some more downside, but you can see it came right off of 140. So this is the wave that I was watching here. So you can see came right down into that golden pocket, came off that 140 level. It has to break 150. You have a really clear level here, 150 and 140. So a close over 150, I think you make a move up here into 160 and then back up into this area. If it breaks 140, I agree with T. You're probably going to come back down into this golden pocket to grab liquidity again down here. But buyers did step in off of that 140 level. So just keep that in mind. And then obviously you need to get 150. You can see that rejection there. On the Tesla side, I agree with T. This is in the golden pocket. So we've had this marked for quite some time. You can see came off of the golden pocket down here. made its move up into the golden pocket here. So if it breaks the top of the golden pocket, then you go up into all-time high, right? We already know this. If you break the golden pocket, then you retrace the whole move. So that's the next thing you're watching for. If it's going to reject here, right? And then you're going to get your wave down to potentially get into positions. Now, if it starts to consolidate above 300, then you're most likely looking for that next move up into all-time high territory. So definitely agree here as well. Like Tesla a lot, but golden pocket is not where you want to be a buyer. We've talked about this countless times. This is not where you buy. This is where you sell, right? Or you start to take some profits. So just some color added to those from a gamma standpoint, and you can see it here. You look at Tesla, 300 was the level. You can see nothing is building above it right now. So if something like 350 starts to build up this week, that could be a good sign that we're going to go higher. If 400 starts to build, that's really what you're going to be watching for. They start to build 400, then that's pretty much them telling you the next target that they're going to shoot for. But right now, because 300 had been building for quite some time, we talked about that in past sessions. So you don't have anything building here to the upside, right? So just keep that in mind. All right. Questions I saw. Mara with Bitcoin ripping. They wanted levels. 20 is still your main level. So I'm assuming you're going to gap over it in the pre-market if Bitcoin runs, into tomorrow morning. And you have nothing building to the upside. Now, that doesn't mean that there's not upside targets. The golden pocket is around, it's been there for quite some time. If you look at this little wave right here, golden pocket, you have this little wave right here. Your golden pocket is about 24 to 22, 23. So, but you can see here, it still has to get through 20. Has not been able to close above that 20 level. So close over 20, I think you get to 23, 24. You break through that, then you go up into this 28 area, right? Because if you break the golden pocket, then you go all the way up. You retrace the whole move, right? So very simple evaluation there. You got to get over 20, and then I'd look for this golden pocket area. App. There was a question about app. Can you take a look at app? Beat earnings and is on a huge run, but retracement levels, etc. It's in price discovery, and I know what you say about that. Yeah. So, what's your question? You want a retrace on app? You don't touch it. I mean, you can do whatever you want, but there's no top of the wave yet.
Yeah.
Like there's nothing to look at here. I mean, if you were in this on earnings, then fantastic. But I would be taking profits if it were me, if I was in this position.
Yeah.
I wouldn't be touching this. I'm assuming you've probably broke through everything. I mean, you got an exposure out there at 250, maybe. I mean, but it's in price discovery. It's at 290. So yeah, you got nothing here. This is blown through everything. 250. Yeah. So yeah, I'm not touching this with a 10-foot pole. Yeah. So I mean, you could have, if you knew this information prior, you can see that it gapped up on earnings to 250, and then when it broke 250, that's when it rocketed.
Yeah, next time you know something about earnings, let us know too, because
Yeah, give us a heads up. Because we don't know anything about earnings. Okay. Financials potentially short-term short. Goldman Sachs specifically cannot get back over 590. 4-hour have a small weekend swing short position. I entered at 595. Okay.
Okay.
GS.
Oh, I haven't looked at GS.
You have a wall at 600 and you have resistance at 580. So not much from a gamma standpoint.
The chart's not very informative neither.
Yeah, I was gonna say I feel like it's probably, again, I think it's ripping, isn't it?
Yep. All-time
I
high.
don't like to short things that I'm personal. It's just me personally.
It's discovery and then consolidation. I mean, these kinds of things, I see if you have a short in it, I would likely exit the short. Why? Because where it is right now, it's a consolidation phase, number one.
Yeah, you got no
Um,
data here either. Like nothing really giving you like see how small the number is? Like you look at SPY, right? It's like 3 point. You look
mm,
at something like this and it's like 0.1, 0.2. That's like no exposure.
mm,
So you might look at this and go, okay, there's buying pressure at 560, but buying pressure with 0.03 is not the same as buying pressure at like 3.4.
mm. Uh,
So the chart
Dylan,
itself
what I
taking a
would say,
look.
Dylan, is see, I think you went like super short term for a
Oh, this is an easy one.
potential like I think you went super short term potential rejection from this like smaller time frame. Yep, where you are, Andrew. And so what I would say is uh next time when you take a short term position like that, understand that that's beneficial for you to take only when there's downward pressure on the stock. This is
Yeah,
where your mistake is.
yeah,
The idea of the trade is not wrong, but you haven't waited for confirmation is the mistake.
yeah.
So you don't have a
Also,
confirmation that this thing is going short. You are assuming it's going short because it has overstretched. So your bias is that you're waiting for mean reversion trade. But then depending on the expiry of your contract, right, that's going to crush you. So you have to be very careful with trades like this because even though it's a bet that you're firing off with good risk reward ratio and then a nice potential setup, the background of the stock is it's very strong. So that's
yeah,
working against you, you know. That's my 2 cents on this.
yeah. And then my piece would be you broke rule number one, which is don't short things in price discovery.
Yeah.
Uh, so
I would exit. That's what my thing would be. I would exit the
I
short.
would say this, if it were me, I wouldn't necessarily exit, but as long as you stay below 600, you're fine.
Yeah. But
If
it
it
depends on the
breaks over
expiry,
600,
right? If you're next to expiry date, you know what I mean? Like,
yeah, you got a pretty easy evaluation. You got a clear high and a clear low. If
yeah.
this breaks, then you get your golden pocket retrace, right? And that could happen, right? If the market makers push the market down to 585,
Uh,
right? This would be your best case scenario, right? You get your retrace. But if breaks over 600 because it isn't price discovery, then you know it goes higher.
yeah.
It doesn't have to stop.
Yeah.
So just keep that in mind. Again, price discovery, you guys want to be careful because you don't know how high they're going to push it.
Mhm.
Okay, we got
So okay, it's
that.
good if you've already taken profits. That's good.
Oh yeah, for sure.
Then just wait for the rejection and then you can short it properly
That
next time.
coin,
Wait, what's
which is
next?
better set up, BA or PDD? I mean, I personally think BA,
Wait,
but
there's net and there's coin as well.
yeah, no, I got the net bull.
Net,
Okay, all right. So we
coin,
do net real quick.
ENPH. Okay, let's do net and coin.
Net. Let's take a look.
Net, I've been watching for a very long time.
Okay, so this one's almost there. Golden Pocket is sitting at about 100 to 105. You've got levels here.
Hmm.
You've got clear gamma at 95 and 100. A little bit of support at 90. So 95 is your biggest exposure level. You're looking at, let's see. These two dogs are cracking me over this bone.
We can't hear anything, so you're good.
Yeah, there's nothing from a data standpoint, from a dealer standpoint. Again, see how small the exposure is.
Hmm.
I don't like to, if it's not there, it's why you don't see me do it too much on the individual stocks. I tend to do it for on the overall market. So if you're going bullish here, I mean, you have to stay above 90. So this would become support. This is a weekly chart. So let me look at the day. This looks like a golden pocket bounce to me. I'm going to go into the 4 hour here. And I think it is. Say that wave is there. Yeah, see how it came right off the golden pocket. So ideally, this is not where I would want to enter because you're in the midpoint of the wave. So
Yeah.
you still have a golden pocket right here at 92 to 94.
I don't
You
like it.
said the next level of exposure is 95.
Yeah, I don't like it.
I'm not a huge fan of the risk to reward here.
Me too. I don't like the RR. It's not a good
Yeah.
setup.
So that would just be kind of, I mean, I would expect it to come to this 95 level, but
But is it a good trade? No.
yeah, you're at the tail end of the overall move, right? If you look at the overall move, this was the move. So this was the best entry in this golden pocket. This wave was really easy to evaluate. Kind of got messed up. So let me just fix it real quick. There we go. Right. So this was the entry. This was a really good entry. This was a liquidity grab right here. And it's already hit above this like 95, 96 area. And so you got $5 until the golden pocket. So you're on the tail end of the move. I do think it probably gets here once it gets over 95, but it's not like from a short-term standpoint, it's not where you'd want to be applying risk.
Yeah.
Personally.
So that previous golden pocket, the one that you drew, Andrew, that's where we played it the last time.
Yeah, I know. That's where you and me were talking about it.
Yeah. So we played it up to like I think 90 something dollars at that point.
Yeah. All right, coin. So
Coin.
coin 270 was the resistance level. I'm assuming it's going to open over it.
Yeah. Very
Very
likely.
similar. This is not where I would be a buyer. You guys can see this is where, we were accumulating positions. Over 270 to 284 is your break. And then you have 300 is kind of a key level there. I'll pull up the numbers so you guys can see it. You can see there's almost no short. It's all bullish. So over 270 and it goes all the way up to 300. You can see that it slowly builds up to 300.
That's so crazy.
So over 300, I mean over 270, I think you get to 300 very easily. Over 300, I think it was buying pressure. It might still be there. Let me just double check. But for people that are not in this trade, you're late. So you can see the bullish positions coming in.
You're late. You're late. Okay.
Okay, so here's your buying pressure. So you get buying pressure at 265, you get buying pressure at 270. You've had buying pressure since 235 and 245, right? And so what that means is the customers are long, and when the customers are long, somebody has to sell them those calls, and the dealer is the one who sells them those calls, and then they have to hedge their risk. So over 270, I think you probably get into the high. You break the high, I think 300. And then based on Fibonacci, your target is 331 and your extension is 390. So those are targets. So 300 would be the next thing you're kind of looking at. Okay, cool. Which trade, BA or PDD? Okay, so BA is sitting down in this long-term golden pocket. So now I want to see it get back into this zone. And then if that happens, this looks like a false breakdown, right? So if this gets back into this zone here and builds, this looks like a liquidity grab. And usually in that case, you make a move back up, right? They just had their strike end with their workers. So could see something there. There's a few key levels that are pretty easy to watch here. And that being 150. Right, here you go. So you got clear support here at 150. Under 150, not good, but if it holds 150, that's good. And you can see a little bit of gamma building up to 160, right? So 150 to 160, pretty clear, easy evaluation there. We take a look at dealer positioning on this name. Let's see. There it is. So you can see not a ton, but selling pressure at 165. So dealers are long 165.35. That's your best piece of information there. So not a ton. So really what you're looking at is 160 to 150. So you can just come in here to the 4 hour real quick. There's 150. There's 160. You looked at this on a small wave. You're looking at about 155 to 156. Two are ridiculous.
So I think Boeing is a nice one for the potential long. I was watching the liquidity sweep from last week, but I'm still waiting for confirmation.
Yeah.
Yeah.
Yeah, they took out the close right here
Yeah,
and got
exactly.
bought up quick.
Those are
So also, if
typically.
you guys are looking at those trades, they tell you the whole plan. So just so you guys know, the plan is right here. I don't know if you guys are reading them, but they'll tell you what they're actually looking for. So long trade potential, look for 150 to 144 range to hold, to pivot, and then use that as a break. Targets are 150 to 155 short term, and then 170 to 180 plus. So they give you a full breakdown of what they're expecting and why they pushed it. Right, here's Tesla. When Tesla came out, they said, look, we're looking for potentially 280 to 300 tests. So they'll tell you what they're actually looking for in this trade idea. A lot of the times people get in too early and then they're down. So like they'll say here, in the coming weeks, what we want to see here is support, right? At 120 to 117. So it's right there. You just have to read it and then don't jump the gun. So looking here at PDD, still has downside. I have it coming down into 110 to 103. That doesn't mean it's necessarily going to get there. That's just what the golden pocket is on this longer term wave. So if I look at this, you can see below 120, which is your biggest support, that broke. So your next one is 110. I don't really like anything to the upside. There's no big exposure level to the upside that stands out. So below 120, I would expect 110. 110 would get me into the golden pocket. So that would make sense to me. Like that. Make that support there. I'm going to add this 120 level real quick also. That was also support. We already broke that. So I'd have to see back over that to want to get in. So PDD. And we can see if there's anything, but I highly doubt there is. I'd be very surprised if there was anything. Yeah, buying pressure at 115. So maybe it bounces at 115. We'll add it to the chart. 115 had 1.0 on it. So a little bit of buying pressure there. And we'll see what happens. But that would be my target down there. UNH bullish position, new all-time high, I believe. Yeah, it looks horrible.
So this was the one also you have to take into account. Yes, so as you were saying, healthcare being bearish. So UNH is one of the biggest allocations to healthcare sector, just FYI. So if indeed you are looking to go long UNH, make sure you have the breakout in XLV to support that move so that it's thematic and a sector rotational move. So if you don't know if that is the case yet, then hold off. Don't short it. Don't go long. Just don't do anything.
So the concern here for me would be if this comes back down below here. Because then this is a liquid.
Correct. Yes. So you have to wait because that's a weekly, right?
Yeah.
Yeah. So the new week will open now and then you'll see.
Yeah, so even if you look at the daily, it'll be the same thing, right? So if the next day closes below that level, and specifically 600, I would expect it to come all the way down off of that wave. So if you look at the gamma, it's gone. Like there's no upside gamma targets anymore. You have all downside. That doesn't mean it's necessarily going to fall. Again, long term, I still like it, but as far as like a weekly day trade, it doesn't. There's nothing from a data standpoint that gives you any insight of next targets or anything. Yeah, see the flow doesn't give you much either. So I would be watching all-time high, which I believe was this area right here. If it breaks back down below that, I would be very cautious as a possible retrace back into this range could happen. It'd be something similar to what we saw here, right? It broke down, then it came back into this range, and then it went to the high, right? So same thing could happen here, comes back down, and then it comes back down into the low.
Also, Andrew, after this, I wanted to give everyone a perspective visual on something.
Okay.
It's like just mainly to do with allocations and pullbacks. I forgot, I wanted to say that earlier, but I kind of goofed.
Yeah. You can do it now. I don't think there's any other questions.
Okay, cool. So just the last thing before, we kind of wrap up today's session, and I hope this was enlightening for you guys. Okay, it's just a matter of perspectives and pullbacks. Okay, just so that you can understand where we are and where we need to get to add positions again and things like that, right? See, this is going to keep moving up. Okay, and as it moves up, obviously you'll just keep adjusting your lines, but essentially the next time that you should be adding long-term equity, for example, buying VOO, is not now. It's only after you get a pullback into either 470, into this or this. So just to put perspective that you would need to have, quite a significant downtrend pullback situation. But as long as you come down into these levels, I would start adding long-term positions again. Okay, so remember, if it gets down to this level here, means we're entering bear market territory. So that means you would add capital as you go further into this. Okay, so where you are and where things are heading to, remember that history is a great teacher, and we can keep going up for long periods of time, guys. It is not bizarre. Okay, look at this. Okay, like, so what you're seeing now is a continuation of a trend, and yes, there will be a pullback and all that, but the time is not entirely right now for that. Okay, so stick with the trend, and focus on that.
But technical analysis tells me the market's going to crash.
Then you need a new type of analysis to balance your fucking conviction, right? Whenever you think of a trade idea, think of the opposite first. Okay, I want this to happen, yes, but then what if it goes wrong first? Get that out of the way. You get that out of the way, then okay, cool. You at least balance your augmentation of risk, right? Otherwise, you're in the la la land, living in freaking a headspace where you're like, oh, anything's possible. Yes, it's possible. Wait, I think there's some more questions. Coin 300, makes sense. Okay, cool. Yes. Oh wow, coin's already at 298. What is this? What app do you guys use to see after hour
Use
pricing?
Robinhood.
Oh, it's Robinhood.
Yeah, Robinhood has after
So
hours trading.
Webull shows the price difference in your portfolio, but doesn't move the price on your actual portfolio. I realized that. Yeah. The small kit portfolio that I started, it only shows me as it's going up, but it doesn't show me the appreciation in the price like right away. It doesn't do that.
Yeah.
But that's all we have for today. Let me stop the recording here. Stop.